Now, here's a question that I get asked quite often. If you have $500 or $1,000, is it possible to take that, put it into a brokerage account, and basically flip it, okay? Meaning doubling your profit over time. If you're looking to get into trading with just $500 or $1,000 and think that you're going to turn it real quick, and get rich, it's not going to happen. Can you take that $500 or $1,000 and double your profit? Yes, you can. And I'm going to show you how you can simply do that. But again, this is for beginner traders who have small amounts of capital. And when we're talking about small amounts of capital, we're not talking about your lunch money. We're not talking about your utility payment money. We're not talking about your mortgage money or your car note money. This is money that you're setting to aside and you're not tied to, okay? All right? You're not afraid to lose $500 or lose $1,000 because you have to understand when we get into this business of trading futures that money can go quick if you do not know how to trade the correct way. So that's what it's all about, is learning the keys, the core concepts, the elements, the things, the need to know things that you must master in order to be able to become a better trader. I'm not going to say a great trader because there are milestones and steps that each trader needs to take to get to a certain level, okay, to kind of balance off, and then they're starting to make profits each and every day, which means you're no longer in the red, you're no longer breaking even, but you're profiting. So, is it a good idea to take $500 or $1,000 and start off? I believe that it's definitely a good idea because if you're not tied to small amounts of money like that, at least you get your feet wet and you get a feel of what it's like to actually trade live versus, a demo in or simulation. And if you lose $500 or $1,000, you're really not emotionally tied to it. That's the thing about trading, and the reason why a lot of people don't get into this business is because they're tied to their money. So they want to take $5,000 or $10,000 that they really don't have, but they do have, but they're taking money from their family savings, okay, or money that they should be using to pay other things with, to pay down debt. And then they want to put it into a brokerage account and just see if they can quickly flip that money. What I see most times, and I hear a lot of people say, and I know, just from other individuals, they end up losing a good chunk of that, all right? Because this is a business, and just like any other business, you have to build up from the ground up, set a foundation and build up and know what you're doing, okay? It doesn't happen overnight. It comes with years and time of experience and putting your effort into these charts and making sure that you understand how to read the market correctly, first of all right? How to use a strategy, effectively. How to build out a good trading plan and follow to that plan, okay? And be consistent with that on a daily basis. But one of the root elements, okay, that most people who succeed in this business have, okay, is patience. Patience is everything because it's going to allow you to determine and really weed out which areas, okay, when we're trading, because I trade supply and demand, are good zones and ones that are not good zones, all right? So I'm going to show you today a simple strategy that I use and how you can definitely take small amounts of money, whether it's $500 or $1,000, but must understand this. You're not going to quickly be able to just get rich doing this. Can you flip this money? Yes, you can. Can you keep flipping it to where maybe you want to start trading, bigger markets like the eminis? Yes. I recommend, if you have a small amount of money of $500 or $1,000, micros. We're talking about the micro futures starting off with, because you're not really going to be able to get into the bigger markets like the eminis because of the margins. And I'm just going to show you an example real quickly, and then I'm going to show you what it really takes and what you can do to basically flip that money a little quicker, all right? Just using higher base or higher time frame charts and looking at areas possibly where the market wants to and hold positions in a sense, meaning that I'm not saying hold overnight or hold throughout a complete session, but when there's good volume in the market, being able to see a area within a session that the market could be targeting, but we're first and foremost paying attention to structure. If we're moving to the downside and breaking structure, the market pulls back to a key zone, and then we have some areas to the left-hand side of the chart, say for example, imbalances, fair value gaps, the market is going to try to test, okay? Then we want to stay in the trade and hold the trade. By holding your trade allows you to make more profit, okay? And I talked about this a video in the past about a strategy or technique to be able to do so, meaning being able to stay into a trade longer, not just jumping out. Basically, we are trailing price as the market is closing and breaking continuing structure to the downside or upside once we're into a trade, and moving our stop accordingly, okay? So what I want to show you, this is through my broker. I just want to say this now, okay? Margins are everything, because people always ask, how much money do you think I need? $500? Can I start with $500? Can I start with $1,000? I don't want to give a concrete answer to that, because it's up to you, to be honest with you. If you're asking simply, is it possible to start trading, to get your feet wet in the market or to fill the market with $500? Yes, you can, but you're going to be using small amounts of money, and you may not have much room to do what you really want to do as far as growth. Can you take $500 or $1,000 and basically penny pinch your way up to where you can flip things over, basically meaning making money every day, all right, and building up a small account? Yes, you can definitely take $500 or $1,000. But again, don't go out trying to quit your full-time job, you're taking a $500 or $1,000 and think that you're going to make $5,000 by the end of the week, okay? Unless you're trading multiple contracts, and you're going to need more capital to be able to do so. Even in the micro markets, even though if you take $500, for example, and you want to trade, say, for example, the NASDAQ. Well, it has $100 per margin, per contract is the margin. I'm going to show you, this is just through my broker. There are other brokers. I'm not pushing them and saying to trade and use them at all, okay? Find one that you can marry and, in a sense of love using them. I'm not saying that AMP Futures is the best. There are other ones out there, Optimus Futures. You have Interactive Brokers and a list of other ones, okay, that are regulated future brokers. Understand that, all right? So if you take a look here, this is the margins, okay? If you take a look here, the micro futures for the S&P is $40 a contract, which means that you have to have at least $40 or have at least $40 to trade one contract. Okay, that's the margin. Now you don't want to do that. Of course, you want to put more money in your account, so you're not having to go back and replenish. If you fall under that amount. But most people like to trade the NASDAQ, okay, or even the Dow. The Dow is $100. Has a $100 margin, which means you have to have at least $100 per contract in your brokerage account to trade. Now, if you have $1,000, you can trade up to 10 contracts. Would I do that? No, in trading the micros, definitely not. I'll probably, honestly, this is just me, I wouldn't trade no more than 2 contracts, okay, with $1,000. $2,000, maybe step it up. Maybe you possibly could do 4 or 5, okay? But again, this is the micros, and then you have the Dow and the Russell as well. These are the indices or the indexes, which most people trade when it comes to futures. Now, if you were to go over here and look at the, let's say, contract specifications, and we look at under the futures, the tick value. Tick value is smaller when it comes to the micros, but I do recommend people that have small amounts of money that are just starting off, that maybe learn how to trade, have a good strategy, have tested it, and it works effectively, to then start off with the micros. Prove yourself that you can be consistent. Prove to yourself that you can be profitable, meaning, you guys know what I always say, you should be green on the day every day, okay? Not red. I'm not saying you're not going to have a slightly losing trade, but risk management is everything. Live to see the next trade and make up the difference and make more, okay? So the thing about it is that with the tick value, say for instance the S&P is $1.25 a tick. So that means that for every movement, either up or down, which is one tick, the payout is $1.25, or you lose $1.25, okay? With the NASDAQ, excuse me guys, it's 50 cents a tick, either up or down. Either you're gonna, start profiting 50 cents a tick as the market moves up or down, depending on the trade that you're in or the direction of the trade that you're in. Or, if it comes back against you, then you're going to be losing 50 cents a tick, okay? But again, the margin is $100 per contract, all right? And with the NASDAQ, we'll go back to the margins right quick. I'm going to show you. Margins, $100 for the NASDAQ, 50 and 50 for the Dow and the Russell, and then with the S&P is $40, okay? All right. People always ask, well, why is it cheaper to the margin for the ES? Well, the ES is, I'm not going to say it's a trickier market to trade, but it doesn't move. There's lots of volume there. It's a very, very thick market. So you have to sit in trades longer, I'll put it like that. So, your patience level of trading could be, you're going to have thicker skin to be able to trade the ES. I'll be honest, because it's not a fast moving market. If you're looking to get into something that once you're into the trade and it moves in one direction quickly in one direction, one or the other, and take your profits, then the ES is not that market to trade. Okay, the ES is for, I'm gonna be honest with you, it's really for the big boys that really know what they're doing. And I'm not telling any beginner trader not to trade it, but just understand that it's a very thick market and it moves very slow. Now, getting back over to the chart right quick. So again, like I said, $500 or $1,000 definitely would trade the micro starting off with to get your feet wet. Can you turn that or flip that? Yes, you can. You can take $500 and make $1,000. It's gonna take a little time. You can take $1,000 and make $2,000 or $3,000. It can take a little time because you got to build up, okay? Because the payout per tick, okay, is very small in comparison to the E-minis. Like, say for example, the NASDAQ, okay, with the micros is 50 cents a tick. With the E-minis is $5 a tick. So you got to see there that the micros is 10 times less than the E-minis, okay, when it comes to tick size, all right? But the micros were designed for people who want to get into trading and don't have large amounts of capital. Or maybe you want to go over to a prop firm and start off that way. It could be a good opportunity. I don't trade using prop firms, guys, so please don't ask me about them. Which one is better than the other? I have no idea, all right? But what I want to do is to show you how you can actually double your profits, okay, if you're looking to start with $500 or $1,000. And it's simply just by staying in a trade longer, looking for good setups, using what I always talk about, paired charts, higher time frame, using it, and then scaling down to get into a trade using your lower time frame chart. So let's take a look at a couple examples, and we're just going to use today's current session right now. I mean, even though the examples I'm going to show were primarily during the London session, okay, maybe you trade London, maybe you trade the Asian, maybe you trade the US session. I mean, that's the great thing about trading futures is the fact is it's open 23 hours a day, 5 days a week, okay, and they only close for an hour, basically for maintenance. All right, so here's two zones I want to talk about. I trade supply and demand. If you trade supply and demand, you know what it's about: aggressive buying and selling, looking for areas where the market created, say for example, this aggressive selling area here where the market gaps lower. All right, and we have these fair value gaps or gaps back up to the zone. You know what I'm talking about, because when the market swiftly moves away from an area, who do you think is making those type moves? Okay, people think that the banks or institutions shut down overnight as far as putting on positions. No, they make money while we sleep. Trust that. Okay, so for example here, this area right here, this is a supply zone. Okay, and it's a high probability supply zone. I'm gonna correct this a little bit. High probability supply zone. Those that follow the channel already know why. This is why I recommend you guys go ahead and hit the sub button now. Go ahead and take 5 seconds. 5, 4, 3, 2, and 1. Okay, let's jump back into it. Hopefully you went ahead and hit that sub button, which I know you probably didn't do. It's quick, but please go ahead and take the time right now to click on the sub or subscribe button if you have not. Join the team here and be part of the channel. Also, make sure to turn on all your post notifications. Click on that little all bell once you hit the sub button so that you never miss one of the uploads here on the channel. Okay, so this is aggressive selling right here. The market gaps down quickly. When the market does things like this, more than likely, because there's imbalances there, it's going to go back and correct this. Well, it has to correct itself. So it's going to go back up there and test that zone. And what we need to think as when it comes from a logical standpoint as a trader, what took place in this area back there? More than likely, there were orders that were resting still there, that are waiting to get filled. And until the market comes back and transacts back at the zone, then they're not going to get filled. But when the market comes back there, they're going to, rest assured, they're going to try to fill those orders, especially if we got the structure of the market pushing to the downside where it's constantly breaking structure. Market structure is everything. I'm telling you right now, please stop. If you do not understand market structure, please do yourself the biggest favor of all and learn market structure, because it's going to make up the difference of you being a successful trader or not succeeding at all. So now, if you pay close attention what took place here, when the market pulled back here, did we start taking out any areas back to the upside, meaning the market shift back in the opposite direction, or give us an indication that it wants to shift going back up? No. Did it start break structure back to the upside? Yes, it did, but it didn't take out any key areas to where it looks like the market pivoted and reversed and started going back to the upside here. So I'm going to take a stab and definitely would be interested if the market rejects this zone here. Now, I'm not up doing a London session trading this, but maybe you are. Maybe you're someone that works, you're at a different zone across the globe, and the London session is a time period for you to trade that session, okay? but I'm in the U.S. markets, and so I'm not up during that time. All right, so when the market retraced back to this area, but I just want to show you because these are the same type examples that happen regardless of the session, okay? Supply and demand. This is supply. There's supply right here as well. This is a high probability setup, and it's part of a strategy that I talk about each and every day. High probability zones are the best zones, okay? Ones that have not been tested. When the market pulls back to this zone right here, all we need to do once we mark off, and again, that's what we're doing. We're marking off a zone on a higher time frame chart first, or higher base chart. I trade range-based charts. Then all I do is move down to a lower time frame. So I'm going to mark this box right here, put it on all charts. We're going to go to around the 2:30 or 2:20, sorry, 2:20 in the morning today time period and see what happened there to see if it was a good, valuable zone or viable zone to get into the trade, okay? And what we're going to aim for is back down here towards the lows, okay? Because there are gaps within the market, like there's a gap right here, okay? The market needs to fill. So if it rejects this, it's going to come down here and more likely fill in the gaps because we're breaking structure lower. So here's a way to be able to get into a nice solid trade off of a higher time frame zone if you're looking to double your profits and not strictly focusing taking small trades off of a lower time frame zone. Look out at the bigger picture off of a higher time frame zone. I'm not saying take the trade off the higher time frame, mark the zone, and then gauge or aim for higher profits by looking below on the higher time frame to see what the market could definitely run down to and fill in imbalances, okay? All right, or come back down and check the lows down here. So if we got into the trade around this area here, say somewhere between, I don't know, 720 to 716, which we're going to see in a minute, and took it all the way back down here to 783, then think about that. That's a big, nice move right there. So let's go down to the lower time frame right now. So this blue rectangular box, what is that? That is the higher time frame of 60 range supply zone, okay? Now, we're on the lower time frame. I look to take my trades off of the lower time frame, not off my higher time frame. I'm not a positional swing trader, so I'm not interested on the movements of the market for say looking for entries off of a higher time frame. Only my lower time frame. The lower time frame is going to give me more of a precise entry point than the higher time frame is going to do. So we're back into the zone, higher time frame zone. All I'm looking for, is a directional shift in the market to where the market moves lower, the tide changes, a shift in the market, and we can start to get structure breaks to the downside. But I want to take my trade back at a supply zone that's created on the lower time frame now and aim for higher time frame targets, okay? So when the market taps into the higher time frame zone here, the 60 range, I see that big box is again, or that rectangle there is. Take a look. Let's see. The market moves lower, takes out some areas to the left-hand side of the chart. That's what you want to look for. Is it taking out areas to the left-hand side of the chart? Are we breaking structure to the left-hand side? Breaking structure lower as well. Yes, we are. Okay, so take a look. All right, so breaking structure lower. Okay, once it starts breaking structure lower, we're taking out areas to the left-hand side of the chart as well. I want to mark off a supply zone. Is this an area of supply right here? Yes, it is. So let's go ahead and mark off. I'm going to show you right quick. Mark off a couple of zones here. This is a zone here. It's tested, but that doesn't mean the market can't reject that area. I like to take my trades more so from my untested zone. Here's an area up here, okay? This one here has not been tested, the top one, okay? Actually, hold on a minute. Let me see. It may have been right here. Yeah, it was tested. So both of these are tested zones. They're lower probability zones, but that does not mean the market can come back up there and react or transact back at those zones, meaning they come back to fill some rest of some additional orders to the downside, and they do that. So once the market pulls back, okay, supply here, the first zone, what did it do? I talk about the market pushes deeper into a zone. Be very careful because it may break through it, and this indeed it did. All it did was come back and test this zone higher right here, okay? Now, it came back to fill this, come back up to this area here. There's a small area of imbalance resting on the inside of that zone there. So I'm still interested at this zone, even though it's been tested where it broke right here and then pulled back, okay? The tested zone right here. I'm still interested. We have an imbalance resting in the zone. It pulls back to the zone. Once we get back into that zone on the lower time frame, this is a supply area, okay? Once it pulls back there on the 12 range chart, all I'm looking for is the break and close of a candle below the last up bullish candle. This hammer candle to the upside, not camel, but candle to the upside broke lower right here. The close of this area here at 717 and a quarter, I'm going short. Again, what are we targeting? We're targeting higher time frame zones. So if we get in at 17 and a quarter, right, again, in this area right here, we're going to aim for this imbalance down here where the market needs to correct itself. And it's probably more likely it's going to come down here and test the lows because it didn't start turning back around and start taking out areas to the left-hand side of the chart and started where it was breaking structure to the upside. So if it rejects this area, it's going to test lower areas. So when it rejected that area up there at 17, hold the trade and try to hold it down to at least around the 84 area, okay? So let's say we're in the trade right here, okay, at 17 and a quarter. I'm going to show you a technique real quick and how you can stay in the trade. Each time the market, once you're into the trade, makes a new low, lower high, and lower low formation, meaning a low, lower high, lower low, pulls back and slightly breaks above this area here. So be careful because they're checking where people, traders got into the trade at. And new people probably got in the trade right here at 17 and a quarter. Okay, so it pushes down, pulls back, breaks lower. I'm going to take an arrow line. I'm just going to show you this right quick. So when we get a push down, pull back, and breaks lower, you can position your stop right here. Okay, so originally the stop is going to be right here. It's going to be at the back end. Okay, that's going to be our supporting area, or you can put it on the back end here of the actual supply zone. But I like to put it where I entered the trade at, right at the back end. So if I got in here at 17 and a quarter, back here, this is my supporting area in which I don't want to see the market push through. If it does, I'm out the trade. So basically put your stop there. When the market makes a low, lower high, and lower low formation, okay, and breaks, put your stop there. And each time it does that, just continue moving your stop lower. Low, lower, high, lower, low. You can put your stop here. Look what it does. Pulls back to the area, tries to check it, makes a lower high, lower low. Put the stop right here. Low, lower, high, lower, low. And put it right here. Low, lower, high, lower, low. Boom, it moves to the downside, right? Then put your stop up here. Okay? And then you may be saying, well, it just pushed all the way down right here. Should I, try to lock in some more profits? You can. I'm not gonna tell anyone how to trade, but I'm just telling you that it's a technique and how you can, what you can do, okay? But it doesn't pull back, right? It keeps going, and we're aiming for what? 80. Oh, actually, we're already close to 84 already. So if we pay attention here, 84 was right here to fill that imbalance right there, right? Right here, once we move that stop lower, we're at 702, and we're looking to get in and we're down to 684, and we're going to take out. So it comes down here, boom, 684 is right here above this high volume area, and we get out the trade. There's no need to move the stop anymore. It doesn't pull back. It just flushes straight to the downside right there, okay? And that's how you can stay into the trade longer, aiming for bigger targets, and at the same time, just hold the trade through. And we're not talking about staying in the trade for a massive amount of time. Once we got in the trade here, this is what, around 3 o'clock in the morning, 2:55, 2:56, and then we get out here, 3:18. You're really into that trade for less than 20 minutes, pretty much. 20, 21 minutes, something like that. Okay? We're not holding the trade for an hour, 2 hours, a few hours. We're getting in and getting out. And that's a massive, a massive move, right? A decent move. And that's all you need is a move like that. Okay? You take 1 or 2 of those a day, really you only need 1, and you can build up and take that $500 or $1,000 and start doubling profit that way pretty quickly. And building an account up, and then you say, "Well, okay, I'm done with the micros. I want to start playing with. I want to start moving up to the bigger leagues now and start trading the eminis." Yes, once you start building that capital into that account, you can do so. So I just want to show you how easy it is, and that's why I always push the idea of saying that use your higher time frame, trade in the direction of the higher time frame. Look for a viable supply or demand zone. This was a supply setup, but a supply setup off of the higher time frame, a zone there, and then move down and use your lower time frame confluence, looking for a supply zone that forms on the lower time frame. Look for confirmation, look for rejection, and get into your trade. That's simple. That's all it is. And that's how, again, you can take $500 or $1,000 for those that want to start off with small amounts and see, what they can do with it. Here's an opportunity, and here's a way to be able to do it, okay? Now, I'm not telling anyone to trade exactly like me. I'm just showing you how I do it and how it's definitely possible that you can do so using smaller amounts of money. All right, that's all I have for you guys today. I appreciate it. Again, if you're not a current subscriber, please take the time to go ahead and click on the sub button. Make sure to turn on all your post notifications. And last but not least, please drop a like. Hit that thumbs up button for me if you found the value in the content today. If you're not a Discord member and you want to join our community, the link to it is down in the description portion of the video. Scroll down. You'll see it's a Discord link. Click on that. It's free of charge to join. People ask me all the time, how can I'm interested in joining, becoming an elite member. Elite members receive the trade breakdowns. What that is where, just like yesterday, I posted a trade breakdown video where I went over a few trades from Friday. So it's as if you're like sitting next to me, and I'm walking you through my mindset, my thought process behind the trades I took, why I took them, where I'll put my stop at, where I would take profit at, things of that nature, because it's helped plenty of people out, especially those that are now profitable. And they thank me time and time again for making videos like that. It's $6.99 a month. That's all it is. Okay? $6.99 a month. So if you're interested in joining, right below the Discord link in the description portion of the video, you'll see a link that says Elite Channel Member. Okay? Or, Elite Channel Member, I believe it is. Or, how's it titled? Let me see. It's actually titled Become an Exclusive Member, but you want to make sure that you enroll in the Elite Channel, becoming an Elite Channel Member. There's 2 tiers that'll pop up. The Elite Channel Member is the second tier. That's the one that you receive the trade breakdowns and the video playlist, okay? So, that's all I have for you today, but that's if you choose to. I'm not saying you have to, but if you want the additional private community videos, then $6.99, becoming an Elite Channel Member, and you will have access to it. But again, that's all I have for you today. I appreciate everyone. I'm getting ready to get over into looking at the markets myself and do some of my own personal trading. Thank you for taking time to watch today's video, and I'll see everyone in the next one. Take care.